See, we are in asset accounting. Actually, there is a problem with the server, right? Just wait, I will show you. So in the previous class, we are seeing one step. Define screen load for asset master data, right? So in this server, right? Actually, this is our server. Our class server is this, right? So in this server, that screen is not opening, right? So actually, I informed the service provider, he has to unlock some programmings there, right? But what he's saying is the server is overloaded and it has to be reinstalled. So I told him to keep the server as it is, don't dismantle it, because all of us are doing the practice in the same server, right? But alternatively, right, we have to do the practice, and also I have to tell you I have to explain you the screen load tool, right? So what I will do is, I will explain this screen load tool in another server. Then what you have to do in your practice, I will tell you. So let me log in to another server. So define screen load tool for asset master data. SPRO, financial accounting, asset accounting, master data, screen load, define screen load for asset master data. Then double click on define screen load for asset master data. And now, write down, select screen load KV10. In the land class, we have assigned the screen load tool KV10, right? But that KV10 is not available in this particular server because this is another server, right? See, we have created, if you remember, we have created the KV10 screen load tool by copying from 1000 land, right? So same fields are also available in the land class. So select 1000 land, double click on logical field groups. So here, the fields are subgrouped again. They are called logical field groups. So there are some fields which are related to general data. There are some fields which are related to posting information. There are some fields which are related to time-dependent data, right? So according to material, double click on logical field groups. Then select to posting information. Double click on field group rules. See, these are the fields. Select calculation data as required entry for main number, sub number, copy. Select required entry for calculation date for main number, sub number, copy. So here we have assigned the screen load tool in the land class, right? Then in the screen load tool KV10, we are selecting calculation as required entry. As a result, when you create the master record for the land under the land class, the user has to compulsory maintain the calculation date. So what is calculation date? Why we have to maintain it as a mandatory? Before that, please remember that in the screen load tool, we are selecting required entry for calculation date. Then this screen load tool was assigned in the land class. As a result, when you create the master record for the land under the land class, the user has to enter the calculation date compulsory, right? Now, write down here, some space is there, no? Wherever you find the space, please write down. Put heading, capitalization date. Capitalization date. It is the date on which the asset was actually put into use. It is the date on which the asset was actually put into use. Number 2, acquisition date. Number 2, acquisition date. It is the date on which the asset was actually purchased. The asset was actually purchased. Within brackets, invoice date. Within brackets, invoice date. The capitalization date. Next paragraph. The capitalization date and acquisition date may be same or different based on the nature of the asset. Based on the nature of the asset. The depreciation is always to be calculated. The depreciation is always to be calculated from the calculation date. So here, even though we don't calculate depreciation on the land, but we are making the calculation as required entry, right? Because the management wants to know from which date this land was put into use. Okay. Then we have selected main number, sub number copy. Means when you create the main asset master record, calculation date should be compulsory given. And when you create the sub asset, the calculation date should be compulsory maintained. And when you create the master record of an asset by copying from another asset master record, then also this field should be mandatory. That's how the field status for asset master records is controlled by asset classes through screen layout rules. Click on Save. Then click on back arrow. Select to posting information. Double click on field group rules. Sorry. 3, time dependent data. Select 3, time dependent data. Double click on field group rules. Select business area as required entry. Select business area as required entry. And ensure all other fields are marked as optional. Here, we have to ensure all other fields are marked as optional only in the training class. But in the real time, right, based on the information needs to be maintained in the asset master records, those fields are to be selected as required entries. For example, here, cost center was already selected as required entry, but you have to make it as optional because if you select cost center as required entry, at the time of creating the master record for land, the user has to compulsory maintain the cost center to which the land belongs. But the cost center is created in controlling only. But we have not yet started controlling, right? That's why in the training class only, we select business area as required entry and other fields ensure that they are selected as optional entries, right? Click on Save. So you have to repeat this step for all other asset classes. But in our asset classes, right? OA, SSKV, L. See, we have one asset class, SSKVL, right? Here, we have assigned the screen layout tool KV10, right? So we are not able to access our screen layout tool KV10, right? That's why what you do is, go back to your material, asset classes. Go to the step, asset classes. In the land class, right, screen load tool, make it as PT10 because PT10 is a previous batch screen load tool. PT10 land. So in the land class, you assign the screen load tool PT10. Then the buildings class, you assign PT11. In this previous batch, the server was working fine, right? So PT11 is there. So buildings, SSKVB, PT11. The screen load tools are created at the client level. So we can use any screen load tool. Then in the plant and machinery class, SSKVP, you enter PT20. Now, after plant and machinery, we have furniture, right? In SSKVF asset class, you enter PT30. Then after furniture, we have vehicles, right? In the vehicles, you assign PT31. Then in SSK AUC, you assign PT40. Okay. Now, here, look at the screen. Say for example, on the land, we don't cover any insurance, right? But on the plant and machinery, on every plant and machinery, we take insurance, right? So in that case, in every plant and machinery master record, we need to maintain the insurance policy number, insurance company, insured value. So in every plant and machinery master record, we need to maintain these three fields compulsory, right? In that case, plant and machinery is there, right? So you select the screen load tool relating to plant and machinery, double click on logical field groups. Then we have one field group rule, insurance, right? Select insurance, double click on field group rules. So in this case, select insurance company as required entry, insurance policy number required entry, right? Then insurance base value required entry. But in other asset classes like land, these fields are not required. So in the land screen load rule, we can select these fields not required. Clear, no? That's how the field status for asset master records is controlled by asset classes through screen load rules. So in your practice also, right? In your asset classes, we just change these asset rules, screen load rules. Now, because in these screen load tools already we have done the same settings. So define screen load for asset master data. Then define screen load for asset depreciation areas. Write down here again. In asset accounting, the field status for asset master records, is controlled by two parameters. Number one, screen layout rule. Number two, depreciation area. See, for example, in one of the previous steps, we have activated depreciation areas, right? For example, SSKVP. In the plant and machinery class, we have activated book depreciation area, right? Then for this book depreciation area, we have given the screen load to 2000, right? Now, according to this depreciation area also, we have to determine the fields. That is the next step. Define screen load for asset depreciation areas. Transaction code AO21. See, in every depreciation area, we have assigned 2000 screen load rule, right? Select the 2000 depreciation asset subnumber level. Double click on field group rules. Select required entry for depreciation keys. Select depreciation key as required entry for main number, subnumber, and copy. For main number, subnumber, and copy. Means in every depreciation area for which the 2000 screen load rule was assigned, compulsory we should maintain the depreciation key. So what is the depreciation key? Click on save. The next topic itself is the depreciation keys.
Sir, where we use this sub number and main number, sir?
No, main asset master record, sub asset master record. We create main assets and sub assets. So in the main asset master records, compulsory we should maintain the depreciation key, and in sub asset master records also we should maintain the depreciation key. Right?
Okay. Okay,
and I already explained you what is main asset and sub asset. Do you remember what's her name?
Jyotsna, sir.
Jyotsna, do you remember that? See,
Yes, sir.
Plant and machinery is a main asset.
Yes,
and we are using one generator exclusively for the plant and machinery. That is called sub asset. Right?
Okay. Okay, sir.
Now, in every asset master record, right, compulsory we have to maintain the depreciation key. Why depreciation key compulsory? Depreciation key. It contains all the necessary values to calculate the depreciation. So in order to calculate depreciation, we require, as per your knowledge, we require rate of depreciation and method of depreciation. In addition to that, we require some other values. All these values are defined in the depreciation key. Then the depreciation key will be assigned in the asset master record. As a result, the system will calculate depreciation according to those values. That's why depreciation key should be mandatory field. It contains all the necessary values to calculate the depreciation. In every depreciation key, we assign base methods, multi-level methods, period control methods, phase of depreciation, and class of depreciation, etc. The depreciation key is assigned in the asset master record. Then the system calculates the depreciation according to the values specified in the depreciation key. Here, in every depreciation key, we have to assign base methods. So before defining the depreciation key, we have to define base methods, multi-level methods, period control methods, etc., right? So first let us define these methods, then we will come to depreciation keys. Under the depreciation key heading, right? Define base methods. So what is base method? The base method contains the general control parameters the system needs for calculating the depreciation. We enter the base method in a depreciation key. The base method is independent of the chart of depreciation, meaning that it does not contain any country-specific settings. We specify the following in the base method. Number one, depreciation type, depreciation calculation method, treatment of end of depreciation. Depreciation type means whether this base method is applicable to book depreciation or special tax depreciation, like that. While doing the step, I will explain again. SPRO. Financial accounting. Asset accounting. depreciation, valuation methods. After that, one folder is missing in the material. After valuation methods, write down depreciation key. The folder is missing, depreciation key. Then it is there. Calculation methods, define base methods. Click on new entries. Base method is equal to SSKV, give some number or name. Base method is equal to SSKV. Description is equal to base method for SSKV. Type of depreciation. So this base method SSKV is applicable to ordinary depreciation or special tax depreciation. We have to define. Select ordinary depreciation. Type of depreciation is equal to select ordinary depreciation within brackets. The base methods are to be defined. The base methods are to be defined for each depreciation type. For each depreciation type separately. Now, depreciation method. Look at the screen. These depreciation methods were already defined in the system. Select stated percentage. Depreciation method. Select stated percentage. Means we have to specify the percentage manually. Say, for example, some of you may know that you might have experienced also. If the life of the asset is 10 years, we calculate depreciation 10% straight line method. Right? If the life of the asset is 20 years, we calculate depreciation straight line method 5%. Means the depreciation rate is determined from the expected life, right? If that is the reason, if that is the requirement, right? Percentage from the useful life. Suppose if you want to use sum of years digits method, it is there. Like that, you can select your method according to your requirement. Okay, so here I'm selecting stated percentage. Then depreciation after planned life end. Do you want to calculate depreciation after expected life of the asset? No. If no means no, if yes means yes. Depreciation after planned life end, no. Depreciation below net book value 0. Suppose if the net book value becomes 0, even then do you want to calculate depreciation? Normally no. Curve also no. What is curve? I will explain you later. So these parameters are defined in the base method. Base method is assigned in the depreciation key. Depreciation key is assigned in the asset master record. Then this base method is applicable to the asset master record, and the values defined in this base method are applicable to asset master record. Clear, no? Next, define declining balance methods. Path is same as above. What happened? Financial accounting, depreciation, valuation methods, depreciation key, calculation methods. SSKV was not saved. Just a minute. Just wait, I'm just checking the server. I think I have done that setting in another server by mistake. Then what we are doing now? Base methods, right? Okay. Yeah, click on save. Ignore the warning message. Ignore the warning message. Now, define declining balance method. Path is same as above. You know what is declining balance methods? Observe that method 001 is available. It is not 0001, 001. It's already available. You need not define anything. Then maximum amount method. So what is this maximum amount method? This method is used to specify maximum amount up to which the system should calculate the depreciation until a certain calendar date. Means, suppose the acquisition value of the asset is 10 lakhs, but I want to depreciate that asset up to 7 lakhs only. So we define that maximum value 7 lakhs. Then every year or every period, the system goes on calculating depreciation. Whenever the total amount of depreciation calculated reaches 7 lakhs, system will stop calculating depreciation. So that maximum amount can be specified up to certain calendar period. That is called maximum amount method. During the specified time period, the system calculates the depreciation only until this amount is reached. Path is same as above. Click on new entries. Maximum amount method is equal to SSK. It's only 3 characters ID. Description of the method is equal to maximum amount method for SSKV. Maximum amount method for SSKV. Click on save. Click on save. After clicking on save, write down. Ignore the warning message. Ignore the warning message. Select the line. Double click on maximum amounts. Click on new entries. Value to 31st December 9,999. Value to 31st December 9,999. Currency INR. Maximum amount 7 lakhs. Just like that. Or 5 lakhs. Your requirement. Click on save. After clicking on save, again write down. Ignore the warning message. Still, some people are considering that yellow message is a error message. Please do not do that. Error message is different from warning message. Anytime warning message can be ignored. Error message means they are displayed in the red color. Then define multi-level methods. So what is this multi-level method? Using the different combinations of method and rate of depreciation during the different phases of expected useful life of the asset. See, again I'm repeating, using the different combinations of method and rate of depreciation during the different phases of expected useful life of the asset. Means, for example, we are in the fiscal year 2018, right? So we purchased one asset on 1/4/2018. The acquisition date of asset is 1/4/2018. The expected life of the asset is 10 years, right? Now, on this asset, I want to calculate depreciation like this. From 1/4/2018 to 31st March 2021. That is for the first 3 years. I want to use straight line method 5%. Then from 1/4/2021 to 31st March 2025. That is 22, 23, 24, 25, right? For the next 4 years, I want to use return on value method 6%. Following? Then from 1/4/2025 to 31st March 2028, please rectify this. 31st March 2028. For the remaining 3 years, I want to use again straight line method 7%. This is called multi-level method, using different combinations of depreciation method and rate. This is the combinations of method and rate during the different phases of the expected life of the asset. First phase is 3 years, second phase is 4 years, third phase is 3 years. This is called multi-level method. But as per our knowledge till now, right, we think that throughout the life of the asset, we use same method and same rate. Yes, that is also possible, and this is also possible. For example, on some of the assets, throughout the life of the asset, we want to use straight line method 5%. On some of the assets, we want to use return on value method 5% throughout the life of the asset. On some of the assets, I want to use the methods like this. So all these methods are to be defined. This is called multi-level method, right? So first I will show you how to define that if the requirement is to use straight line method 5% throughout the life of the asset. And also, if the requirement is to define return on value method 5% throughout the life of the asset. After that, how to define this type of method also we show you. But what is straight line method and what is return on value method? You have any idea? Everybody is having the idea?
Yes, sir. Yes, sir.
Yes, sir.
Yes, sir.
Okay. Anyhow, some of you may not be having the idea. Let me explain. It takes 5 minutes only. Say, for example, acquisition cost of the asset is 10 lakhs. Expected life is 10 years. Right? Then rate of depreciation is 10%. Right? In that case, straight line method. Straight line method. First year. Every year, depreciation is calculated like this. Every year, the 10% is applied on the acquisition value. So first year, let us take it as 1 lakh. Calculation will be easy. So 1 lakh into 10 by 100, which comes to 10,000, right? Then second year, again 1 lakh into 10 by 100, that comes to 10,000 again. Third year, one lakh into 10 by 100, which comes to 10,000. So every year, the depreciation amount is same because in the straight line method, the depreciation percentage is applied on the acquisition value. So acquisition value is called base value. Acquisition value is called base value. This you have to remember. So in the straight line method, acquisition value is base value. Base value means the depreciation, base value means the value on which the depreciation is calculated, right? But in the case of written down value method, what happens is the depreciation is calculated on the net book value. First year, same. First year, 1 lakh into 10 by 100, that is 10,000, right? But second year, depreciation, net book value into 10 by 100. What is the net book value? Acquisition value minus depreciation for first year. That is 10,000, right? That means 1 lakh minus 10,000 is equal to 90,000 into 10 by 100, which comes to 9,000. Right? Third year, 90,000 minus depreciation for the second year. 9,000 is equal to 81,000 into 10 by 100, which comes to 8,100. So here, in the case of return down value method, the net book value is base value. Means in the case of return down value method, the depreciation is always calculated on the net book value. That is the difference between straight line method and return down value method, right? With the help of this knowledge, let us see how to define. First, we will see how to define if the requirement is to use straight line method 5% and on some of the assets, return down value method 5% throughout the life of the asset. Okay. Path is same as above. Define multi-level methods. Click on new entries. Multi-level method is equal to KV1. Give some number or name. Multi-level method is equal to KV1. Description is equal to multi-level method number 1. Description is equal to multi-level method number 1. Validity start. From the ordinary depreciation start date. Validity start from the ordinary depreciation start date. Click on save. Double click on levels. Click on new entries. First take the notes, I will explain. Acquisition is equal to 999. Years 999, 999 years. Periods 12. Base value. In the case, I want to define straight line method 5%, right? So in the case of straight line method, base value is what? Acquisition value. So 0, 1. These values are system defined. Okay? You cannot define your own values. Percent, 5%. Click on save. Look at the scheme. Acquisition year 999, Acquisition year 9999 means in any year you purchase the asset. Whether you purchase the asset in 2022 or 2023 or 2025 or 2030 or 2050 or even 2100, any year you purchase the asset. For 999 years of expected life of the asset. Years we have entered 999 means for 999 years of expected life of asset. Any asset will have this much life? No. But still we have entered 999 means throughout the life of the asset. Then period 12. For any fraction of the year, the system will apply 5% on the acquisition value, which is simply straight line method 5%. Clear? Click on back arrow twice. Click on next entry button. Multi-level method is equal to KV2. Multi-level method is equal to KV2. Description is equal to, so how all these methods are linked to our asset master records, it will come later on. Multi-level method number 2. Validity start is equal to from the ordinary depreciation start date. Click on save. Double click on levels. Click on new entries. Acquisition year 9999. Years 999 for 999 years of expected life. Period 12. So in the case of return on value method, the base value is 24, net book value. Base value is equal to 24, percentage 5%. Click on save. How to define the method as given in the example? Same transaction code AFAMS. Same transaction code.
So that means we are giving 999, no, sir? That means until the value of a good nullifies, it will calculate the depreciation.
Exactly.
Okay, sir.
Click on new entries. Multi-level method is equal to KV3. Multi-level method is equal to KV3. Description is equal to multi-level method number 3. Description is equal to multi-level method number 3. Validity start from the ordinary depreciation start date. Validity start from the ordinary depreciation start date. Click on save. Double click on levels. Click on new entries. So assuming that acquisition year is 2022, right? Assuming that acquisition year is 2022 for 10 years, 3 phases. So under the acquisition year 2022, years 3, first phase length is 3, period 0. Means the tenure of the first phase is exactly 3 years. Suppose for first 3.5 years, you want to use straight line method 5%, right? In that case, 6 months. Right? So period 0, base value 0, 1, straight line method 5%, no? Percent 5. Then acquisition year 2022, year 7, within brackets 3 plus 4. We have to enter accumulated value. Period 0. Second phase, net book return on value method, right? In the return on value method, net book value is the base. So base value is equal to 24, percentage 6. Acquisition year 2022, years 10, period 0. Again, it wants to shift back to straight line method. In the case of straight line method, base value 0, 1. Percentage 7%. So define my maintain period control methods. This we will see in tomorrow's class. Tomorrow and day after tomorrow, asset accounting will be over. Monday we will see. Saturday we will take the class. Saturday we will see preparation of financial statements. Then from Sunday we start controlling. Any questions?
Now, what about practice? This one, sir, for us?
Which one?
This step, server is different, as you said.
No, I told you, no, in your asset classes, right? You enter the screen load tools, what I told you in the class. That's enough.
Okay.
I have just shown you the step in the recording, that's it. Okay. In your asset classes, you assign the screen load tools, what I told you in the class. You can listen to the recording again. Okay.
If it is interlink not happened also, we can.
It's not at all interlinked. Don't worry.
Okay, sir. Sir, it's about the APP, sir.
Huh?
Automatic payment program, sir. Sir, when we are running the program, if it is any error comes on the same date, we can't run another one, sir.
No, you have to remove the proposal. You have to create another proposal.
How to remove it, sir?
You have to delete the proposal.
Yeah, yes, sir.
What's your run date?
13/11, sir.
Then identification?
Identification cone 1, sir. K0, yes, sir.
Right?
Yeah,
now,
sir.
Go to menu, edit, proposal.
Yes, sir.
No, payment run has been carried out. Once the payment run has been carried out, you cannot delete the proposal.
Okay.
Now, what is your issue?
That's what, sir. Somewhat errors are coming. That's what, sir. See, yes.
Do one thing, right?
Sir.
Clear the invoices manually. Okay.
Invoices manually, sir.
You clear the vendor invoices manually. Okay.
Sir.
Then post the fresh invoices. Then
Sir.
execute it.
Sir, on this date, it is not running, sir.
No. See, you use another date, ma.
Okay.
You post the invoices today, right? You enter the date today.
That's what it is coming, sir. But on this date, if I tried to on this date, it is not coming, sir.
No. On this date will not come.
Okay.
Because the payment run has been carried out.
If I want before the run rate, before payment run, we can edit it. We can delete it, sir.
Yes.
Okay. On the edit, we have to go for the edit and we have to delete it.
Once the proposal is created, but before the execution of the payment run, you can delete. Further,
okay,
go to menu, edit, proposal. Here, delete option will be highlighted. Here it is grayed out, right?
It is also, sir. Sir?
No, in this case, delete option is grayed out.
Yes, sir.
But before payment and execution, if you come to this path, delete option will be, highlighted.
Okay, sir. It will be the same for the dunning process also, sir.
I have to check the screen, right?
Okay.
I cannot remember them.
Okay, sir.
Otherwise, you can do one thing.
Sir.
Just go to edit payment, delete output. After deleting the payment data, it is no longer possible to create payment media for the payment run. Do you still want to continue with the payment and data deletion? No. Click on no. You post some more invoices with the current date, execute the payment run with the current date.
Yes, sir. But as usual, when you saw that one error has came now, sir, in the proposal, edit proposal. It is coming, sir. So how to resolve it? I don't know.
When you get that error, let me know. I will check it out.
Okay, sir.
Without the error, I cannot check anything.
This is the error, sir. This is my company itself.
Yes, madam. Again, when you're doing it, if you get that error, just send me the screenshot.
Okay.
I did not remember that error.
Okay.